Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. First and foremost, I have a Memorial Day statement. Our debt to the heroic men and valiant women in the service of our country can never be repaid. They have earned our undying gratitude. America will never forget their sacrifices. Okay, let's kick this one off with a quick look back. Major U.S. stock indexes rose Friday, with the tech-heavy NASDAQ scoring a fresh record peak ahead of the three-day weekend honoring Memorial Day. The NASDAQ and the S&P 500 each sealed a fifth straight week of gains, while the Dow snapped a five-week winning streak. Investors were buying the dip as U.S. stocks rose in an environment where profits are going up and the economy is still strong. U.S. stocks all finished higher Friday, with the Dow rising less than 0.1%, the S&P gaining 0.7%, and the NASDAQ climbing a sharp 1.1%. The NASDAQ finished at a fresh record closing peak of 16,920, while the S&P 500 advanced to 5304 to end just 0.3% below its record close. But then a warning from Bank of America. B of A's Hartnett says stock rally is moving closer to sell signal. Rising global equity breadth to be a contrarian sell indicator. All major asset classes record inflows in latest week. The rally in global equity markets is at risk of overheating, according to strategist Hartnett. The bank's so-called global breadth rule shows that about 71% of equity indexes are trading above both their 50-day and 200-day moving averages. A reading above 88% would trigger a contrarian sell signal. My subscribers know Uncle Frank watches these mother scratchers every day, and when they finally mess up, you'll have a front row seat, I promise. Hedge funds sold U.S. equities at a rate not seen since early January, marking a significant shift in investment behavior after 5 consecutive weeks of net buying. This change in momentum was highlighted in a report by Goldman Sachs Prime Brokerage, which noted the sell-off aligns with recent positive economic growth signs and a firm stance from the Fed Reserve indicating that interest rates may stay elevated for an extended period. According to the report, here it is, both macro products, including indexes and ETFs, and single stocks experience net selling. They're taking profits. They're moving to the sidelines, guys. The last week marked the first time in 6 weeks that macro products were net sold, while single stocks saw their third consecutive week of net sales, posting the highest notional net selling observed so far this year. The selling activity was widespread across all 11 U.S. sectors for the week ending May 24th, with industrials, information technology, financials, energy, materials, and real estate leading the downturn. The cyclical sectors, in particular, faced the heftiest notional net selling since December. The industrial sector was notably impacted, experiencing net selling for 11 consecutive sessions. This sector, which includes machinery, ground transportation, professional services, and passenger airlines, saw the most significant amount of net selling over any 2-week span in over a decade. The rats may be leaving the ship. Both GME and AMC had eventful Fridays and even more eventful after-hours sessions. GME got as low as 1770 early on to close the day at 19 flat, up 68 cents or 3.71%. But after hours, on remarks the $933 million stock sale was complete, the stock got as high as $23.80, but finished the session up another 2.49 or 13.1%, ending the session at 21.49. Like GameStop, all Adam Aron has to do to experience a flash recovery in the stock price is say, I'm done selling and diluting for now unless there's an emergency. But he never will, because he loves the power and control he has over the stock price to crush any rally when Wall Street needs him to. AMC began Friday pre-market as low as $4.59 and closed regular trading hours at $4.84, up 29 cents or 6.37%. AMC followed GME after hours, spiking as high as 5.25, but couldn't hold the gains as market makers walked the stock back down to $4.89. AMC still captured another 5 cents or 1.03%. I can't help but notice how wonderful this was for market makers like Citadel, Virtu, and Goldman, that all this activity happened after hours, especially on options expiration day when Max Payne was at $4.50. They have been openly raking premium off the table for months using obvious manipulation tactics in full view of regulators, making, or in this case, saving themselves millions of dollars, defrauding thousands of investors by manipulating stock prices on expiration day in particular. Can we retire this clown at 70 for once and for all? Jim Cramer, the host of Mad Money, who had previously labeled GameStop as arguably the worst company in America, has now expressed a positive outlook for the company. On Friday, Cramer took to Twitter and said, GameStop now has enough cash to become something other than GameStop. Congrats! His statement came after GameStop announced the conclusion of its previously disclosed at-the-market equity offering program, under which the company successfully sold 45 million shares. GameStop generated total gross proceeds of $933 million. This implies an offering price of approximately $20.74 per share. Hey, don't feel bad, GME fans. Adam Aron sells APE at 60 cents, which was just one share of AMC disguised as a preferred share. Cramer previously urged investors to sell GameStop, expressing doubts about the company's stock price reaching 64 or even 44. He said, and I quote, I can't see GameStop trading at 64 or even 44. The responsible move is to sell, sell, sell. And everyone that followed that advice missed a run to where? 64 per share. You can't make this shit up. At Investor Place, they're just running out of ideas for hit pieces now. You call this financial journalism, David Modell? AMC stock. Don't buy it. Don't short it. Don't even look at it. Nothing is guaranteed with AMC stock except volatility and anxiety. And speaking of volatility, is anyone else watching the VIX? Look at the daily chart. If she gets back down to 1150, I may have to step in. There's just too much goofy shit that can happen out here. This is not investment advice, not tax advice, not legal advice, not marital advice, not gardening tips. I'm just making a personal observation here. Shown on your screen are just the top 5 executives from the 2023 fiscal year AMC listed on its annual proxy statement to the SEC. All 5 are paid in the top 3 positions in their pay rank by title in the media industry. Most notably, our attorney, Kevin M. Connor, is the #1 highest paid executive in the industry by title at over $2.7 million. And Adam Aron coming in second by his title at over $25 million. Adam is paid triple what the CEO of main competitor Cinemark is paid, and our CFO is paid more than 2.5 times more than the CFO of Cinemark, not including an extra $168,000 in compensation from a board seat at Highcroft he was given, making him the second highest paid board member at HYMC. This executive team is paying themselves like there never was a pandemic, like there never was a shortage of movie releases from Hollywood, like there never was a writer's strike, like there never was an actor's strike, like we never were over $5 billion in debt, like we don't owe back rent, which when added to our balance sheet brings the total to over $9 billion as of December 2023. For its 2022 fiscal year, AMC listed 7 of the following board members on its annual proxy statement to the SEC. Not one board member earns under $250,000 on this list, the lowest being $267,000 and the highest being $377,000, going to board leader Philip Lader. As of February 2024, the board of directors now has 10 members. I challenge anyone listening, any yes-tard, any Adam Aaron fanboy, to name one thing Philip Lader has done for AMC, the company, since he joined the firm. I'm waiting. The 78-year-old that runs our board of directors is no lightweight. Ambassador Lader serves or has served on the boards of the Rand Corporation, Lloyd's of London, Marathon Oil, AES Corp, and many, many others. If Mr. Lader wanted to, he could end the criminal and open manipulation of AMC with one phone call. Phil served in President Clinton's cabinet as administrator of the SBA, White House Deputy Chief of Staff, and Deputy Director of the Office of Management and Budget. But that will never happen, because Phil is also currently a senior advisor to Morgan Stanley Institutional Trading. He serves on several of its investment committees and boards of its private equity portfolio companies, in addition to investment banking responsibilities. Just this year, Morgan Stanley was hit with a $249 million fine for block trading fraud. That's institutional trading, by the way. Morgan Stanley claimed it had the most confidential block trading operation, but prosecutors said it was secretly leaking info to hedge funds to lessen its risk, costing sellers millions. If you ask me, I would have phrased that charge differently. Morgan Stanley was giving tips on big upcoming block trades to its best customers, the hedge funds, so they could make money front-running the trades. Ken Griffin's Citadel was among the hedge funds that got Morgan Stanley's block trading leaks. Of course, Citadel and other hedge funds weren't accused of any wrongdoing. This slide goes out to all the people fighting the titans of Wall Street behind the scenes, Donahue George, CSI, Al from Boston, and several others. I knew that some things might emerge from the case against Bill Wang involving the collapse of his hedge fund, Archegos, and the ultimate demise of Credit Suisse. The first of such things we've learned is Morgan Stanley was directly involved. Here's a headline from Bloomberg. Morgan Stanley was angry as Archegos fell, witness says. Wang launched project to raise cash days before disaster. Star witness describes desperate cash scramble and lies to banks. So, let's review. We know that Credit Suisse was short AMC. We know Credit Suisse put out a sell recommendation on AMC and a 95-cent price target on the stock. We know Credit Suisse's chairman blamed social media and retail investors for the swift downfall of the bank, not Archegos. He blamed retail, not Archegos. We know Credit Suisse's problems were nothing new. The bank had struggled with scandals, financial losses, mismanagement, and liquidity problems for years. But in 2021, Credit Suisse was one of the banks involved in the Archegos collapse, which caused it a $4.7 billion loss, and now we know Morgan Stanley was involved also. Morgan Stanley was part owner of Equilend, the securities lending cartel. A Morgan Stanley executive runs AMC's board of directors. Morgan Stanley was fined for handing out block trading tips to hedge funds in January of this year, and Citadel was cited as one of the firms receiving those tips. Philip Lader, the leader of AMC's board, was also part of the AMC APE Pricing Committee. Philip Lader was found to have a daughter in senior management at Uniswap, where tokenized AMC was found to be trading. Not enough for you? Don't worry, we'll keep digging. From the article, when Archegos reached out about looming margin calls in March of 2021, Credit Suisse took a very soft tone, while Morgan Stanley was much harsher, angry. So guys, they have a rat on the stand, one of Bill's employees named Becker, and he's spilling the beans. Becker, 40 years old, on Tuesday gave jurors a look at Archegos' final days from inside what prosecutors allege was the corrupt core of Wang's family office. That end came suddenly, he testified. Wang launched an ambitious project to raise more cash just days before disaster struck. That quickly became a frantic but ultimately futile scramble, with banks being fed lies to buy time, Becker said. I'm not going to read the entire article to you, but you should read it. Wang directed his inner circle to find the cash that might let Archegos trade its way out of the hole, Becker said. Now, guys, I understand he's not speaking about AMC directly on the stand, but I now have connected Morgan Stanley to this debacle, which supports my theory that Philip Lader will not permit AMC to do anything deliberate that would hurt the interests of Wall Street. So a serious conflict of interest may have existed and may exist to this day. Now, what may come next is the AMC board working to advance the interests of Wall Street at the expense of AMC shareholders. Just my opinion. You know, protecting the interests of Wall Street is one crime, but advancing their interests is quite another. Now might be a good time to mention that Morgan Stanley's James Gorman said on Thursday that he will step down as executive chairman of the board at the end of the year. So, Uncle Frank, what do you buy when everything seems to be at a record high? Well, my motto is always be earning. Always be earning. Currently, I have two monthly dividend payers I buy on dips, GUT, or the Gabelli Utility Trust, and PSEC, Prospect Capital. Let's discuss the Gabelli Utility Trust, not investment advice or advisor. Here's the weekly chart going back 5 years. What don't I like about GUT? It trades at a high premium above its net asset value, or NIV, but it always trades like that. Why do I like utilities instead of just bond funds? Because what happens when you don't pay the light bill? They turn off your electric. What happens when you don't pay the gas bill? They turn it off. What happens when you don't pay the water bill, guys? They turn it off, right? So they've got your undivided attention and an ironclad collection policy. Whenever GUT drops under 6, I'll buy some from time to time, because at that price I can get the 10% dividend yield. This thing pays monthly, not quarterly. I have no plans to ever sell it. Therefore, I'll always be earning. It will pay me for the rest of my life. I'm currently reinvesting the dividends, so I'll even get a small raise theoretically every month. This thing mainly trades sideways, but you could actually trade it if you wanted to. I put yellow arrows at the prominent bottoms on the chart and 2 yellow horizontal lines. The line at 6 shows where I may buy when it dips below so I could get the 10% yield. When it rises above 680 levels, I might be tempted to sell some. See the white arrows. When I retire, I'll switch from reinvesting the dividends to cash distributions so I could live on it, God willing. But I really don't want to sell it because it's a little money machine. So is PSEC. So how do I fund my little money machine with other people's money? Well, Uncle Frank and his wife have 2 cash rewards credit cards. I'm sure you guys have one too. And we made each other authorized users on each other's cards. The reason we did that is that gives us a combined 4 separate 5% cashback categories as opposed to only 2, and 2 2% cashback categories instead of only 1. So let's look at the categories on my card. Fast food, cable, internet, streaming, cell phone, home utilities, right? And then here's the 2% categories: groceries, restaurants, gas stations. All right, so think about this for a minute. There are 3 people on my cell phone account, for example. Let's say that's $150 a month times 12 times 5%. That adds up, all swept into my position in gut, earning 10% and also paying me monthly, reinvesting the dividends. Think of this: a year worth of groceries, very expensive, times 2%, swept into gut. A year worth of gasoline for 2 drivers, times 2%, swept into gut. Even State Farm takes credit cards now. A year worth of auto insurance, times 1% because it's not a category, then swept into an investment, making 10%. Every time I spend, I get paid. Every time I'm paid, I'm investing in something that pays me monthly. That's the plan. Another technique I use to accelerate the money I can invest in my brokerage account and gut is stacking rewards. Businesses will pay you for your loyalty, and you can exploit that to your advantage. Now, Uncle Frank is not a crazy coupon clipper. This is a simple change I made that really paid off over the long term. The trick is to prepay for things like gasoline. You're going to spend the money on gas anyway. Might as well get paid to do it. Let me show you what I do. First off, I only gas up at Speedway, and I have a rewards card membership there, which is free. I will load a gas gift card with $100. I get points for every purchase from Speedway and a bonus for loading the $100. I pay with my cashback credit card, so I'll earn 2% on the initial transaction. Plus, I will earn even more points when I actually use the gift card at the pump. If you were paying close attention, Uncle Frank earned 4 times on what essentially was just one transaction. I can use the cash back to invest in gut, and I could use the points that I've earned at Speedway to redeem free gift cards. Now, everyone has heard about gold setting new record highs, price spikes in silver, even a short squeeze in copper. Well, maybe we could find the next one, right? On your screen is the weekly chart for the SPPP closed-end trust going back to 2022. It's the Sprott Physical Platinum and Palladium Trust, and it invests and holds all of its assets in physical platinum and palladium bullion. But here's why I'm interested. On Wednesday, May 22nd, SPPP was added to the New York Stock Exchange list of threshold securities, and it remains there as of Friday, May 24th. Now, this is not investment advice, and I'm not an investment advisor. I will never tell you to buy, sell, or hold any securities or cryptocurrency, but Uncle Frank has opened a position at around $10. Now, SPPP has a $114 million market cap, a 52-week low of $855, and a 52-week high of $1293. The 50-day moving average is 984, and the 200-day is at 965. So we're currently above both of those, but over the past year, it's down 18.61%, and over the past 2 years, it's down 27.15%. So will palladium be the next big spike or short squeeze in precious metals? I see 4 factors: drama in Russia, automotive demand, the China rebound, and we've already been targeted by short sellers. From this past Friday, all that glitters isn't gold. An even bigger surge in palladium prices could be around the corner. While investors are focused on gold and silver, the time to start focusing on palladium may be here. Many investors don't find it as interesting as gold or silver, But that doesn't mean you should ignore the potential for momentum to kick in and kick in aggressively. Several fundamental factors suggest that palladium is set for a bull run in the near term. Number one, this includes resurgent demand from the auto sector. Number two, geopolitical factors. Palladium is a byproduct of nickel, and any impact to Russian nickel would affect palladium. And number three, an economic recovery in regions such as China. And Uncle Frank will add a number four here, that we're already on the threshold list for some reason, aren't we? On the automotive side, palladium is a core material for catalytic converters, so we already know that. But what about the geopolitical side? Russia is the lead supplier of palladium. Geopolitical tensions, notably due to the ongoing war in Ukraine, put supply coming from Russia at risk. That alone should make you bullish on palladium, according to the author Michael Gayed. China, the third factor, is the main driver now of palladium prices. The level of economic growth in China is the single most important factor for global demand for physical palladium. Should China recover and re-accelerate its economic growth, it's likely that it would carry palladium prices up with it. China is a net importer of palladium and has very little in the way of its own domestic supply. Palladium is correlated strongly with other precious metals and historically moves with gold and silver in bull markets, often with a lag. A rising tide in precious metals usually lifts all boats, at least to a degree. Palladium looks promising, according to the author, but of course has its risks. Off its peak, it's down a whopping 67%. The chart looks like it has bottomed, but for all we know, this downtrend may not be over. Furthermore, if China fails to deliver on economic resurgence plans, it will be hard for palladium to run. So guys, let me ask your opinion. Do we have to look very far for drama in Russia that might impact the palladium market? Ukraine says it struck anti-missile defense radar in Russia. Ukrainian precision attack destroys Russian warship in the Black Sea. And breaking Sunday morning, Russian military shakeup, high-ranking officers detained amid coup rumors. Recent weeks have seen purges within the Russian army, with many high-ranking military officers arrested. Officially, their detention is attributed to corruption and embezzlement. However, there are theories suggesting an entirely different reason. General SVR on Twitter speculates the detained individuals were plotting a coup against Vladimir Putin. Now, SPPP has physical bullion in palladium and platinum. This article on platinum came out in early March, but I wanted to point something out here. Why platinum prices continue to lose luster despite tight supplies. The global platinum market saw a record deficit in 2023. From the article, platinum prices fell last year and are trading lower this year, threatening the profitability for miners of the metal despite persistently tight supplies. Now, platinum has made a little rally since this article, and I'll show you on the chart. Against that backdrop, the fall in prices for the industrial and precious metal seems to defy logic. The metal has underperformed an overall rise in the commodity sector, even as the global platinum market marked a record deficit in 2023, poised to extend that deficit into 2024. Now, according to Jim Wyckoff's July platinum chart from Thursday, you could see platinum has made a nice little run, and the upper band has been calling short-term tops pretty well using the Bollinger Band indicator. July platinum closed at 1035 on Friday, so I'm going to be watching that middle band closely as we go forward. June palladium is at 968, so I'm seeing weakness, but possibly a bottom. Hey, can we take a minute to reflect on Tuesday, May 14th? That was the day they halted AMC 22 times, and I think I could see why from the looks of that daily chart on the right side of your screen. Yeah, that sure looks like an important day for the stock price to me. No comment from the lady that runs the New York Stock Exchange specifically about the number of AMC halts. No comment from the SEC or FINRA. No comment from the Limit Up, Limit Down committee. How about a comment from our CEO or CFO? So what? No investigation whatsoever. We're just going to pretend that shit didn't happen. All those halts were for our protection. They were all legit, right? They didn't directly benefit interests on Wall Street. The same interest Adam protects whenever he kills a rally using a poorly timed tweet about dilution or bankruptcy risks. How many times have I said on this show, if we do get a rally or even a short squeeze, do you think Adam will forget to dilute? Of course he won't. Do you think the Limit Up, Limit Down committee will forget to halt the stock? They put on a fucking shock and awe show for the whole world to see. Do you think the financial press will forget to put out hit pieces? I've never seen more ridiculous ones than I have since this day, right? Will the market makers forget to spoof and layer the stock? How about the prime brokers? Maybe they'll stop supporting their best customers, the hedgies. Not yet, right? Will the SEC or FINRA come to our rescue? Not so far, boys and girls. Maybe the politicians will come to our aid. Other than Trump's team, I'm not seeing Washington giving up their donation checks from Kenny just yet. Remember, Uncle Frank isn't interested in winning arguments. I'm interested in winning trades, giving my subscribers the financial stories that fly under the radar. But most of all, I want my money back. I want to win on this trade. I've told you for a long time now, it will not be regulators or regulatory crackdowns that deliver us from this mess. But just like I rooted for Phase 6 and NSCC rules, I will root for T+1 and the CAT system. It will not be a return to profitability, Adam Aaron, a magic dividend designed by short sellers of our stock that sit in our very own boardroom on Zoom calls. It won't be politicians or any of that shit. It will only be a black or white swan. And I think you got a taste of that from Ryan Cohen's tweet. Maybe the former chair of the SEC has a comment on our behalf. Nope, no interest. And if 22 halts in one day are legitimate and, that's just fair markets playing out, or was there something bad going on, right? Don't hold your breath. This is the same beat-off that took Ripple XRP to court because he thinks it's a security. Or did he do it because he was told to delay the technology of Ripple until the government can completely control it and sanction people? Or did he do it to give Swift a chance to catch up? We may never know. With GameStop share price skyrocketing, a former SEC chair explains why the actions of Roaring Kitty and resulting meme stock frenzy bother him, right? See, he's not concerned about naked short sellers targeting an American company to such a large degree that if the stock price actually advances, just to cover their trade, it may take down a hedge fund, a prime broker, a retail broker like Robinhood, and even a clearing firm like Apex. No, what offends him most was one tweet from Roaring Kitty, a guy sitting in a chair leaning forward. You see, guys, they ignore what goes on Wall Street. Retail investors are the problem. This was the same rationale they used when they took away the buy button at Robinhood, and some of you still trade there. What this guy doesn't understand, you were paid to protect us, asswipe, not Wall Street. You're supposed to police them, not let them tear us apart because they got over their skis on a short trade. From earlier this month, private equity firm accused of buying life insurance policies on old people to profit from their deaths. In a new lawsuit filed in Delaware, the equity firm Apollo Global Management has been accused of carrying out a widespread, fraudulent human life wagering conspiracy. Let me translate that for you. The company was, as the estate of one alleged victim claims, taking out life insurance policies against the lives of the elderly in hopes that they'd die soon and they could collect big. And, as the suit details, went out of its way to hide it all too. Now, guys, I ask you, is that really that different from wagering a company will go down the tubes so you can profit from the misery of the pandemic? Well, as the Financial Times explains in its reporting on the suit, one case goes all the way back to 2006. Now, I will never get tired of telling you that from 2006 to 2015, 9 years, Adam Aron served as senior operating partner of Apollo. There are some of you out there that still can't see the pandemic was the best thing that ever happened to Adam Aron, his family, and our senior management team. They've never made more money than they have off of us. Apollo, on its end, of course, denied wrongdoing to the Financial Times and said that what the suit describes is a gross mischaracterization, disingenuous, and flat out wrong. Well, it's hard to deny something a judge has already ruled to be true. But when you're playing around with people's lives and money, boldness apparently comes with the territory. Guys, I want you to know I want the apes unified again. I've never said I'm smarter than any other YouTube personalities or even the Adam Aron supporters. I have called them naive and stupid for continuing to support him after everything he's done. But the first thing you learn in a game like chess is how the different chess pieces can move. If you don't know what kind of chess piece Adam is, you'll never understand why every time he does anything, our stock craters 10 to 30%. You'll just keep making excuses for his behavior. Even if your stock is down 99%, off its all-time highs. Let me solve this riddle for you. He is a distressed credit private equity executive, just like Himanshu Gulati of Antara Capital or Jason Mudrick. These guys are different chess pieces than, say, the CEO of Cinemark or the CEO of Tesla. Why don't you read the bio of Himanshu Gulati on LinkedIn? You'll see the words distress credit over and over again. In my career, I've worked for distressed credit executives for over a decade. Their motto is, if everything works out for the company, I got paid. If nothing works out for the company, I got paid. My grandfather used to say of these kind of people, they are the first to steal, they are the first to squeal. You want an example? Adam cashed in his stock years ago first, and when he got catfished and blackmailed, he went straight to the FBI. I've also worked for investment bankers that took over a dozen companies public. I worked in the boardroom of a publicly traded bank. There I answered to the CEO and the board of directors as a division director. I know what goes on in the boardroom. Have you read the minutes of the AMC boardroom from the Allegheny case? Be honest. Do you think they're talking about retail popcorn in there? They're not. Do you think I would ever try to tell Boss Blunts about logistics? Would I ever tell Phil for Real about music production? Would I ever try to tell AMC Bigums about delivering pizzas? Of course I wouldn't. When I show the investment bankers I've known for over 30 years our convertible preferred share, formerly known as the APE, they have a very different but clear opinion about what it is and what it was designed to do. It was never designed to raise money. If you owned a business that I ran for you, you would never allow me to give away shares of your company as a dividend for free. They were given away to benefit someone, and it was not the shareholders. But I will tell you, there's a reason Adam didn't put Apollo on his Twitter work history. I know why, do you? Well, it's time Adam Aron fanboys admit to themselves what's really going on here and join those of us that demand Adam's resignation, along with Sean Goodman's, Philip Lader, and John Merriweather. What infuriates me most about our CEO Adam and our CFO Sean Goodman is they are both ranked among the highest paid by their titles, but can't be bothered to ever stick up for the same people that made them millions and millions of dollars. One glaring example was this headline from DataLend, the PR department for the securities lending cartel no one knows anything about. That's called Equilend. Securities lending revenue in 2023 reached a modern record of $10.7 billion, up 8.6% over 2022. These are the people that loan out securities to be shorted and then charge the cost to borrow fee, right? But the other headline, AMC stock generated $511 million in revenue for lenders, most of any security globally. For me, that's statistically impossible without the existence of synthetic shares. For AMC to achieve this milestone and never have your CEO or CFO comment or push back in any way tells me exactly what kind of executives they really are. Hey, look, guys, Dougie Large made an investment. Virtu Financial disclosed in a recent SEC filing that it acquired over 404,000 shares of Rivian in the first quarter of the year. With the last closing price at $10.70 per share, this new position is valued at approximately $4.33 million. Good. I hope they short its dick right into the dirt, Doug. It's down 50.52% year to date, so I hope they knock it down further and then reverse split it. Hey, we haven't had to do this since the ape converted. Let's go over to Yahoo Finance and screen for the most shorted stocks. We'll set stock price over $1, average 3-month volume over 200,000, and we'll set the exchange for the New York. 1,645 estimated results. Let's take a peek. So here are the results. I see some familiar names on here. Cinemark is in the 10th position. Carvana is in the 12th. GameStop is in the 19th spot, and we're finally back on here. AMC is in the 22nd spot of the most shorted stocks under this criteria. So Cinemark is more heavily shorted than AMC, but trades at 18. Meanwhile, I'm at 48 cents on a pre-split basis. Got it. Did you guys know Cinemark never did a stock split in its 40-year history? Who wants to guess how long before we're back on the threshold list and Adam will be forced to make another phone call? My guess is Wednesday. Let me tell you something. The pounce was nothing more than a reset button for Wall Street, guys. Nothing more. Old tricks are the best tricks. Why change anything if it works, right, guys? On Friday, only 8% of our volume was actually executed on the exchange we're listed on. GameStop only got 6.24% done on the New York. Why even have an exchange at this point? What a disgrace. Well, this is what I warned about in previous videos, and here it is, the worst Memorial Day weekend box office in decades. And from the Wrap, Furiosa to be box office lowest Memorial Day #1 in 29 years. If you think it's hard to fight the shorts when the theaters are full, wait till you see what they can do when our top-line revenue dries up. The apes need to pack the theaters on Monday to turn this shit around ASAP. You see, guys, this is why you don't pay yourself double and triple what your competitors pay its executives. This is why you don't give your stock away for free as a dividend. You sell it off like a normal preferred convertible share offering at 15, 20, or 25 per share. The apes and institutions would have bought it all. We own this fucking float 4 times over anyway. Do you really think we wouldn't have bought a preferred share that paid a dividend? This is why you don't invest in bankrupt gold mines. This is why you don't blow $250 million on new projectors. This is why you don't blow $25 million on commercials that only appear in the theater. Burn rate, people, burn rate. What did I tell you all about distressed credit executives? If everything goes well, I got paid first. If nothing goes well, I got paid first. That's how these people get down. Hey guys, it may be boring, but if it's a problem for hedge funds, I'm going to tell you about it. Hedge funds hit by lack of private equity exits. From the article, private equity struggle to return money to clients is hitting hedge funds, which rely on the same pension plans, foundations, and endowments for fundraising. Hedge funds seeking to raise money from institutional investors are being rebuffed on the grounds that the institutions lack the cash to give them. The difficulty is at least in part due to a slowdown in distributions that investors have received from private equity funds. These are rich people problems. In this episode, I saved the best for last, just for the people that hung in there until the end. Everyone who has the attention span of a hamster are already gone, so they don't get the benefit from this. You do. This week will be shortened by Memorial Day, with the markets closed on Monday. With the earnings season nearly finished, there'll be no releases that could swing the market sentiment. However, the week will be quite heavy on economic data, which we will review now. 9 Fed Reserve members will be running their mouths this week. 9. They only do that when they've got something to sell. Tuesday the 28th, T+1 settlement cycle to take effect. 9 a.m., Case-Shiller Home Price Index, and at 10 a.m., that's Eastern Time, Consumer Confidence. On Thursday, the 30th, we're going to get initial jobless claims and GDP first revision at 8:30, and then at 10, pending home sales. But this week is about Friday. Friday, May 31st, CAT system should go live. It's options expiration day. 8:30 in the morning, we're getting personal income and spending, but we're also getting the entire PCE group of data, which is the Fed Reserve's preferred inflation measure. Guys, somebody is going to get their ass kicked this week, and I don't think it's going to be us. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.